All right, good evening and welcome to the end of day review for today. Today we do this recording a little bit late than normal. This is our full disclosure right there. So today is Monday 28, 2024. Sorry, today is Tuesday 29 right there. For some reason we still have our mind stuck on yesterday, but we have a giant move today, beautiful move today. Yesterday, you remember the day that we should avoid, because yesterday the price action is very strange. It didn't move much at all. Basically, it had a huge gap up, and then it did not move much at all. And that's exactly what the setup for today. So day by day, little we're getting better to recognize the liquidity, how the algo is set up for the next move. At first, we don't know, right? We make mistakes. Yesterday we trade and we blow up our Praxis accounts. But that's where we learn. We learn from the mistake, from the failure. Just keep in mind that the mistakes or the failure is not the opposite of the success. Actually, the mistakes and the failure is part of success. So that's how we reframe reframe the way we look at the failure and the mistakes. That way we help us to moving forward with ease, with a much, attachment at all. We just go with flow. We let go of our control right there. So in terms of week, we are week 44. Right? We are week 44, and we are in Q4, last Q of this month. So we're 29. Tomorrow we're going to see the GDP data come out, and then we're going to see the PCA data, and then Friday we're going to see non-farm payroll. So this week is filled of economic data. The critical one is this Friday, non-farm payroll, which set the tone for the month, which is November right there. Right, this GDP data, and then it's the PCA data, and then the non-farm payroll at 8:30. All right, that is for the economic calendar. Okay, now look at the charts right here. So pay attention right here. You see the gap up right here. That is the gap it create on Monday. You see that, the Monday, and the reason why we've got frustrated on Monday, that why it not go down and fill the gap during the regular trading hour. You see that? We thought an open gap right here, and you see the huge short sell off at 9:30, but boom, it just retraced and it have another leg down right there, but after that it just gets stall right there. You see that? And then in the Asia it make another expansion down, and in the London it just kind of reverse right there, and then it reverse back, and right here we have a fill the gap and reverse. So retracement, expansion and reverse right there. But interesting right here, we see that this is a this is a electronic trading hour which is, we see the gap right here. So this gap is not a regular gap at all. It's a void gap. The reason why void gap, because there's no order in here. Even the electronic, right? Normally we see is a regular gap, which is the gap only when you see that let's say you see right here the 9:30 open, and here's the 18-hour open. So that's the gap right there. You don't see it here on the electronic, but on the regular hour, it's the gap right there. But for this gap, it's very special. It's a void gap. It doesn't have any order at all. The electronic hour is supposed to capture all order, but it's no gap right there. So it's something special right there. That's the point we try to bring home right there. Yeah, look at the, right here is the regular trading hour, right? So you see that right there, that is the regular gap, which is the difference between the 9:30 open and the prior day close. But on Monday, we see this huge gap right here. This is the void gap because it's sold on both, right? It's sold on both. It's sold on the regular trading hour and the electronic hour. Let's see, you see that? The gap right there. Here. See that gap? Yeah, the open right here. Yes, so that's the gap. That gap is including the void gap right there. So the void gap actually, yeah, at level. You see that, the 9:30 right there. So there's two kind of gap right there. One is the void gap and one is just the regular gap. That's the point we try to make. But we see the very interesting pattern. Let's look, the pattern we see on today. Very interesting UK that we can compare and contrast to see what the difference between today, the graph. So basically you see that the Monday it opened with a gap. That is the last Friday. The gap right there, and the Monday not filling the gap. It holds there. The algo it hold right there, but you see very interesting that the next day, which is today, Tuesday, right? Is Monday, Tuesday, it fill the gap. And how did it fill the gap? It used a method called Judah swing. 9:30, right there. It swing at 9:30, fill the gap, and boom. As soon as it fill the gap, it reverse. Yeah, so here is how it look in the real time. We play the recording right there. You're gonna see. You see that? That's how it fill the gap with the 9:30. It swing. You see the hit? It fill the gap right there. See that huge? That's Judah swing right there. But this is special Judah swing because it's just one single swing at 9:30. That's it. But the other day we have Judah swing right here. It's less than just the 9:30, which is 15 minutes. This is last like an hour. The reversal come at 10:30, but this guy is just only one swing, and it fill in the gap, and then it reverse from there. If you look carefully, you see the setup right there. Test from below, break, and reverse. So that is the type 2 reversal right there. Type 2 reversal. That is the type 2 reversal. I think we do have, yes, we do have a swing shot right here. See that, the type 2 reversal. You have test from below, break, and reverse. That is our type 2 reversal. Yeah, here's our playbook for reversal type 1 or type 2. So in this case is a type 2 right there, short setup. Okay? You see that? It break, test from below, break and reverse. So basically it make another expansion down move right there at this level at 58.50 right there. So expansion and then you can reverse, because if the job is right here of this move of the euro swing, it just fill the gap. It will not take the low of this prior day BM right there. It will not take the buy sell side liquidity. That's not the job. The job is just this move is just the job of this move is just fill the gap and reverse. Yeah, look at the tap. You see that it did not take the you see that it did not take the sell side liquidity at all. So 9 minutes. Yeah, it did not take at all. So that's the euro swing. Look at this. We remember last time we had this phenomenon that only one single swing at 9:30 is, I think, October. Look at the last time we have is October right here, October 2nd on Wednesday. So you see the similar setup right here. So it's a one single swing at 9:30, right? And you can see that is the euro swing at 9:30. But this one is a special. Euro swing is have couple of variation, but this one is special in terms of it's only do one swing, one single swing at 9:30. It's not gonna follow through with 9:45 and last for an hour swing, last for an hour in reverse. But this one is only one swing. But this case similar like today, but the only difference is that this swing take out a low. Yes, it take out a low. But the swing for today did not take out the low. So that's the huge difference right there. The swing for today did not take out the low. The swing today only fill up the void gap right here. That's the beauty right there. Only fill up the void gap. Yeah. But it's similar like October the 2nd, like we show you the chart right there. The October 2nd right here. October 2nd, which is a one single swing, euro swing at 9:30, take out the low of the previous day. That's it, and then it swing up. So today is more special. Special in the sense I have a void gap, and also if it also overlap with another pattern we call is the gap fill next day. So you remember, keep in mind that we have this gap, void gap on Monday, but it did not fill on Monday, it fill on Tuesday, which is today. So we see that pattern before, the pattern that the gap fill next day. We see that pattern on we see this pattern on October 15th, not long ago. So basically the idea is that it have a gap. You look on the here's the regular trading hour, so you can see the gap. So the gap is created on Monday, which is exactly like this week, right? This week created a gap. The gap up, right? Yes, this week it also created a gap, but it did not fill until today in the PM. But look at here, on October 15, the gap not fill on Monday, but it fill on the Tuesday, and look at the fill, the time of the fill. The time when it fill is in the PM. You see that? Yes, it fill in PM. That's the beauty right there. It's not a hurry to fill right away in the morning in AM right there. So it takes time to fill them in the PM. Maybe too much order or whatever reason, but that's what we observe. And another thing we observe that this gap is not a void gap because it's only on the regular trading hour. On the electronic hour, you not see this gap. But the gap today is special because it's a void gap. It were formation on both electronic and regular trading hour. You see on this, you don't see the gap on this electronic hour. You only see it on regular trading hour. Right? But for today, it's a special gap. It's solved on the electronic hour. So this is a void gap. Basically, there's no order around here. The algo just decided to jump. We just set up to jump. So it's a huge right there. Yeah, set up to jump. So basically today we see this pattern, two pattern for this today. The gap fill next day, that's the first pattern right there. And another pattern overlap is the single Euro swing at 9:30. Fill the gap and then boom, reverse right there. That's two key feature that we see right there. All right, let's see how this progress. How do we trade for today? Before that, we want to point out something real quick. Yeah, we look at the pattern, right? Whenever we see this hammer, right, double, right, we call double formation right there, then you know that it's gonna make expansion. That means the expansion, retracement, one more retracement. It's a second retracement, and this hammer shows us that means we can go long. Boom, go for the next expansion move right there, and then it reverses. So that's another pattern. Yeah, that's another pattern that we observe and we put in our playbook. Yeah, here's another setup we see for today. It's a reversal type 1. Basically, it's break, test a form above and reverse. You can go with it level 66, 58, 66, or this level 65 is reverse right there. And keep in mind that it will not take the low of this candle. Yeah, it will not take the low of this candle. So when we entry on the reverse, check M for this level, the low of this candle, or the other level right here at the 58.61 right there. And also that whenever you see the hammer candle formation that reverse right here, inverse right there, then just go long. You don't have to aim for this, but you go long and aim for this level, or just simply at the high level, high time frame level, or simply when this candle close. It may not hit that level, but for sure it's gonna be close. We can access a trade when this candle close right there. we make the huge profits on this candle. That's the reason why we didn't trade on this, but that's the lesson for us right there. Whenever we see this huge inverted hammer candle formation, then that the market tells us, or the algo tells us it's gonna move up one more. It's gonna give one more try, one more move, expansion move, and it did right there. And then soon after that, it's just retracement. Here's another observation we have. So whenever we see a huge expansion move, right, it's called impulse move, or a huge, candle up close or down close, then watch for the next candle, which is the follow-up candle. If it's a doji, in this case it's a hammer right there, then watch for that level, how the market move around that level. You see that? It break that level right away, and then it's what? It retracement. Then you know that it gonna break that level again and expansion to the upside. If it failed to break that level, then it gonna make what? It gonna make the second leg out. Basically, it gonna turn a retracement right here into a reversal. We see that phenomenal, very popular. Let's look at another use case right here. You look at this phenomenal. You see that it tests, it break, and it reverse right away at this level. You see, it tests, break, reverse right away, and then it have a test from below, and you have this flip right here, and before that you have this level, so it know exactly it's gonna be make the expansion move. Yeah, September 24. Yeah, so that is the level that we see. Here's another example we have in June. Yeah, right there. You see the level? It never break this level, so it make a second leg down right there. And here's another example right here. See that it break through and then it reverse back right away. And it failed to break through this level, so it's a second leg down right there. So we call this setup or pattern is a candle after expansion move right there. So that's another setup that we try to build the use case around this setup. Yeah, watch the level. You see, it tried to break the low of the candle many times. 1, 2, 3, 4, 5. So it gives us a signal. Last time it tried to break, it's right here, and it failed. Then we're gonna go in and go long. You could make a non-expensive move. And also we see that after it reversal here, it will never reverse from here. It's gonna make a retracement and make a second leg up right there. Because right here is a huge reversal, a few gap reversal, so it gives us a strong, momentum. So there will be no reversal from here. Just wait for retracement and buy into the low, then we're good to go. So to understand the liquidity run or draw on liquidity is so critical for us, so we can have a very good, directional bias, so it's easy to trade. That helps us to know when we need to stay in the trade longer or when we need to take a quick profit and get out. All right, let's see the trade we took for today. All right, let's see what lesson we learned for today when we took trade. So we see the setup right away at 8:45. You see that test from below right there. So we anticipate a short right there. That's beautiful. Let it run, because we look below, we see the gap. You look at 9:30, you see the gap below. Yeah, 9:45. All right, let's look at the 9:45. Sorry, 8:45. 8. Yeah. So it's a test from without, it will break it, right? That's 45. We go in right there, and we put a stop loss above the candle. Is that right? Yes, perfect. Let run. But yeah, we put at the gap level right there, and only a little bit chicken, so we move very close to the low hanging fruits at 46. Wow, 46. What's that? 46. Yeah, this high time frame level right there, but it go more than that. Yeah, with high time frame level right there, it go more than that. It go down to the breakout level at 39 right there, or the gap right there. So we check M low. We chicken nuggets, so we check M low. Well, let's see how we handle this trade. It's good. Just stay in the trade. I think we get a little bit nervous right here, and we exit the trade. Okay, go to our. Oh, again, what did we do? All right, we still short them. Yeah, let's see what happened right here. Oh, we close the trade and we go long. Oh, we see the reason. Okay, so we thought that this guy gonna follow through, right? Follow through and continue to go down. But it flip it back. You see that? But we very naive. The flip it back is just the setup to make a giant move down. But from at that moment we look this, we say, oh wow, it tests from below and it reverse. So it break, test from below. That's, you look at the level 52 right there, it break, test from below and reverse. That is our logic when we exit the short trade and we go to long trade. Is that right? Yeah. Let's see. Oh no, I think we're still in a short trade. No, I think we go long.
Order filled.
Yeah, I think we go long. Yes, that one when we see the flip, we decide to go long. Yeah, we jump from short to long.
Order filled.
Okay, and then we try to exit them. Yes, we turn long and then it flip back. We should not do that. And let's see. 9. Boom, you see that? I think we. Yeah, you see that? Is that 9:30? 9:29. So we thought, wow, you see that? Test from below and reverse. That's what we see. So we go along. I think we need to put the buy the break even right away. And then it flip back. Go to 9:30 right there. See 9:30. So it's gonna be a type 2 reversal, right? Test from a break and reverse. Boom. Yeah, I think did we go long? Okay, so we go in and I think we jump into a long position. Okay, so we go along right here. Yeah, because we see the gap fill, and we see.
Order filled.
Oh, well. Yeah, we try short them because we think that it's gonna be hit that level. Boom. Yes, it did not. It reversed. So we decided to go long. Yeah, we go long right here. We add more. And here's the beautiful trade. Come, boom. You see that? It hit. Beautiful trade. We go long right there. So that's the huge lesson learned for us right there. If we short right there, we need to stay in that short. Let it hit the void gap right there, and then we can go along. We make mistake that we go back and forth right there. Just stay in one direction and let's
I have a
figure
question.
out,
So the way
how
can
play.
understand at the frequencies.
And I think that's it for today. Thank you for your time and interest. We're always grateful for this opportunity. We do what we love, and success come our way. And day by day, little by little, we're gonna get in better and better. Bye for now, and have great night. See you tomorrow.